Thatcher is with us for the bigger picture, president of Bright Lake Wealth Management. Ted, good to speak with you. Yesterday we heard, we've been hearing from the Fed this week. It was Wednesday, and I'm missing my days. But we know that they've been in a wait-and-see mode. Yesterday we got the PCE and today the jobs report. What do you think about what the Fed's been doing?
I think that the Fed's comments are really interesting, especially after the fact. Jerome Powell came out and he mentioned really looking forward. I think a lot of us were anticipating no rate change here in July. But he mentioned the September meeting and he said, okay, well, we're still going to very much have this wait and see approach. And after seeing the Fed's split decision for the first time, actually, with multiple dissenters weighing in since I think it was the early 90s, I think it's clear that the Fed has mixed opinions here. And really, it's quite interesting. I think that there hasn't been a whole lot of data to maybe wet Jerome Powell's beak, as they say, in terms of his appetite for those rate cuts until this morning. I mean, I think you see those revisions on the jobs numbers for the last few months come down, as well as only showing 73,000 new jobs created. The labor market, of course, weighs heavily into Jerome Powell's decision. And perhaps we might see a little bit of a different tone in September.
Yeah, and yesterday when we got the PCE print, I will say that, that inflation, part of that rose the most in 4 months. So there was an inflation part of that story yesterday. So we were saying that Jay Powell yesterday probably felt pretty good about the wait and see approach. Today we see this jobs report, which was terrible. But Raphael Bostic was out today and he talked about, the Fed's mandate, labor and also inflation. And he said, look, the labor market looks pretty good. I mean, he wasn't particularly worried at this moment. In fact, there was more risk for inflation. So still supporting that wait and see mode. Any final thought on that? And then I want to get to some names to watch too.
No, I definitely agree. I mean, obviously, you see the GDP number, you see the inflation, and then still, of course, some of the potential longstanding effects from the tariffs. It does sort of warrant that wait and see data-driven perspective that he's shared. But I do think that with the with the jobs data that we saw today, it could perhaps change the narrative a little bit. But to your point, we can move on as well.
Yeah. You did talk about opportunity. You did look at AI, and there are still some names within big tech that you think are attractive, right?
Yeah, absolutely. Of course, everyone wants to talk about AI these days. I've been talking about Google Alphabet quite a lot lately. The truth is I think there's just been this bear mentality around Google for some reason because of the concern around AI affecting their search business. And when you look at their Q2 earnings, their Blue Link search business is still up 12% year over year. And when you look at Google's trading multiple, it's trading around 20 to 21 times earnings right now. If you compare that to the broader S&P 500 market, that's trading around 27 or 28 times earnings. And so if you said, hey, what's your prediction here, Ted? I would tell you, I think that between now and the end of the year, Google is in a position to outperform the rest of the market broadly. And so I am very bullish on it. They have 270 million paid subscribers across YouTube and their Google One services. And still, there's a tremendous growth story for Google. They have a tremendous team built around AI. They're very primed to be able to take advantage of that market, to say nothing of Waymo and their cloud business as well.
So in the meantime, let's get to some of the other names. So thank you for that, because I do think it's an interesting story. How about Nike? Is there opportunity now in this name?
I think there finally is. Nike hit its high in November of 2021. John Donahue was at the helm, and it took a terrible slide. And eventually, of course, they ousted John Donahue, and new management has taken over. He was originally brought in to kind of bring Nike to the forefront of the modern era in e-commerce and things. And after you look at a lot of the analysts' breakdown, essentially what had happened is they got too overextended in that way. They kind of lost some of the brand adherence that they've had, and they kind of oversold a lot of those legacy lines. And so now that management has been able to really diagnose those problems and start to make a shift, you see analysts, notably at JP Morgan, saying we're going to revise our price per earnings targets for 2026 as well as 2027. And they say, quote, just buy it. And they are not alone. They've also been supported. Other banks have also said, hey, we're going to put this position not just from a buy and hold, but to a buy. We want more Nike. We see a growth story for it.
Yeah. You did talk about NVIDIA. Tell me a little bit about, has it been a name that you've liked for a long time? Do you buy on the dips? What's the strategy here? Because obviously Jensen Huang is the, visionary of the operation.
Yeah, he sure is. I think that NVIDIA's price targets have also come up. Morgan Stanley revised their price target to $200. There's a whole bunch of upward movement on the price targets for NVIDIA. I've seen a couple as high as $250 a share. I'm not sure I'm ready to go that far. But when you're trying to say, who do I want to buy in this AI space, you have to look at NVIDIA. I think that it's a very strong case to make that they have a tremendous moat in this area, especially around the hardware. At President Trump's Winning in AI event there, I think it was last week, he just gave Jensen a tremendous amount of praise and flowers, talking about how he had a discussion with Ted Cruz, I think it was, where they were just talking about how even if you were going to try to make a dent in NVIDIA's market share, it would take you 10 years. And you could only do it if Jensen ran the company incredibly poorly. And so I think that statements like that make me look even, through even further rose-colored glasses for NVIDIA. They have a tremendous moat, and they're the ones to bet on right now.
Understood. Yeah, I mean, these are three great names that you're focused on. You have Google, Alphabet, Nike, and NVIDIA. What kind of upside potential do you expect for these stocks? When you pick a stock, I mean, do you have a minimum, like it better go up 10% or 5% or 20%? And then you have, obviously, your bull case. How much can these stocks go up?
I think that when you look at, how much you want something to grow, whenever I'm trying to get return, I'm always thinking, how does that also balance against how much risk is being taken? Obviously, there's tremendous tailwinds in the AI industry. And so those names pop out. In terms of the percentage return, as long as it is measured in terms of the risk that's also being taken to get that equal opposite potential return, that's the way I look at it. And really, it does also come down to diversification. We're not just talking about AI companies today. We're talking about Nike as well. Those tend to be very uncorrelated as a general term in terms of course, the sectors they're in. And so we think about diversification and return as well.
All right, Ted Thatcher, President, Bright Lake Wealth Management. Great to see you. Appreciate it. Thank you.
Thank you.